Welcome, flippers. Here's another recap video, and this will be a short one breaking down Euro US dollar where I took a loss today. Then after this video, I will make another video about USD Swiss franc where I took two short positions and made 4% profit. But first of all, let's just break down Euro US dollar because I can share some valuable thing with you guys that I just noticed about this trade. And most likely this thing that I'm going to show you was the reason behind the loss we have made right here. So yeah, we'll try to break it down in a really short video. Test out how the short recap video format is performing. Anyways, Euro US dollar 4-hour time frame. I'm not going to explain the 4-hour time frame with the advanced structure mapping technique because the very last recent recap video on WAP is breaking down this price action exactly here. So what I'm going to tell you is the continuation of what I've already broken down. So basically what we took here is we took longs up to the 71 level right here. And I told you that on the 71 level, according to the structure mapping technique, we can look for shorts again, targeting this low point. And this was the original plan. On the 15-minute time frame, what I want to show you regarding this trade is that price mitigated this 71 level. The 71 level mitigation took place on Friday with a really huge movement, which was powered by CPI news release. So basically, after this price it ranged for quite a while, right? So in the remaining time of Friday, it just basically ranged in this one single range. Then on Sunday, the market has opened and Asia it continued to range in this range still. So what we have here is a really big range. From the top down to the bottom, we have a range right here. And what took place here? Let me just mark out the range precisely like this. This is the high, this is the low of the range, and price has been ranging inside of these two lines, basically creating not a single volume gap, valuable volume gap, and not a single break of nothing. So what took place right here, or what we have been expecting first of all, is basically either the break of this low point, because this was the correct market structure low. We were expecting this low to be broken, and we were expecting this to be happening with like a sweep of a previous high point, 50-minute high point, and then a market structure shift, taking a setup right here. Or the second thing we were expecting is the sweep of this high point right here, which it has happened here. And after the sweep of this high point, we were expecting a shift in the market structure like it took place right here. And yeah, you guessed it right. This is the setup I'm going to draw for you because yes, we have the setup here. Price took out the liquidity from above the high point. After taking out the liquidity, it broke the less recent low point that did create this less recent new highest high, which was located right here. So after taking out the previous high point, taking out the previous higher high means that there will be a higher low somewhere. So we have a new higher high, and if we have a new higher high, it means we have a higher low, which will be this one. And this higher low was broken, meaning we have a market structure shift and we can pull out the Fibonacci from this high down to the low point. Okay, this is a setup that we have been aiming for, right? This is the confirmation setup that we have been aiming for. I'm going to tell you up front that this failed. This was a loss. And let me just show you that it was a loss, actually, immediately, right here on this candle, 2 candle, 30 minutes, sweep of the high point, bam, take out immediately. But the reason of me creating this video is not to just show you that, yeah, we took a loss here, bye guys, no. I want to show you that why most likely we took this loss. So I know that most of you guys are familiar with the concept range sweeping concept, right? Because we even have an educational video about it. And we talked about range sweeping concepts many times in the recap videos as well. I mean, if you take a look at the titles of these recap videos, you will see range sweeping concept mentioned a few times. So what range sweeping concept is that when price moves in one particular range, for example, creating equal highs, equal lows, or creating, decreasing channel like this, creating a trend line liquidity on the upside, trend line liquidity on the downside. Both of these are ranges. Let's just stick to the first range when we have equal highs, equal lows, basically the same scenario as it took place right here, where we had the equal lows right here, we had the equal tops right there. Basically, price was creating this very big range moving sideways inside of this box, which is a range. So, what we know about ranges, that both of the sides on the ranges are getting swept out almost every single time without a failure. So if we have equal tops, equal bottoms, creating a range like this, moving in a box sideways. When price sweeps out the bottom first, for example, like sweeps out this the deep bottom of the range, sweeps it out, then with a really, really high chance, it will go for the high point as well. And after taking out the high point, what we normally expect to happen is that sweep of the low, sweep of the high, price will come back down to a 71 level or order block at this region and will continue in a bullish direction. When the high is getting swept out first, like price takes out the high point here first, it will most likely, with a 99% chance, will go for the low point as well. And when both of the sides of the liquid is getting swept out, in this case, when price sweeps out the low as the second sweeping direction, it will go for a short continuation on the 71 level right here. So the logic right here is pretty simple. Whichever direction is getting swept out as the second sweeping direction, so for example, when price sweeps out the bottom and then it sweeps out the top will be the second sweeping direction. And which direction is getting swept out secondly is the direction where price will most likely head to. So if the top is getting swept out as a second sweeping direction, it will mean that it has a pretty high chance to move into the bullish direction after taking out this high point. If the low point is getting swept out as a second sweeping direction, like the top is getting swept out first, the bottom is second, then price has a pretty high chance to move into a bearish direction. And if you take a look at this very example right here, what took place here is that price took out the bottom of the range, swept out the bottom. Exactly right here, the low was swept out, and then price swept out the top, which means that after taking out the bottom, then a top, it means that price will continue into a bullish direction. So this is basically the reason why this setup has failed. I wasn't even looking at this range sweeping, the range concept right here. I was just hyped about seeing this sweep and then a shift in the structure with liquidity built up. Yeah, this trade could have been taken, but I'm just explaining that what was the reason behind this loss. Let me just see if price actually came back down to a 71 level. No, it actually did not come back down to the 71 level. It just rejected on somewhere around the 50% of this range and continued into the bullish direction. So once again, this is why most likely this setup has failed, and I hope you guys could learn something new from this video. Take care and goodbye.